Andy, program's yours.
Hey, thank you. You guys can hear me right? I'm fully masked up here. I'm so excited about the mask. We've been wearing the masks, and they told me, the Supreme Court's, they got to decide this stuff and tell us whether we, have to be safe and everything. So, actually, it's very nervous. I get nervous when I'm talking in front of crowds because, I don't do it that often. And when you follow a great presenter like Matt Bennett and you're in front of these other presenters, it's pretty nervous. And so I'm at home a couple nights ago, and I'm practicing my little speech up here that I'm going to talk to you about crop insurance. And, my kids are there, and my littlest one is 13. She comes in, she says, "Dad, what are you doing?" And I said, "Well, I got to give a speech on Thursday to this crowd, and I'm kind of practicing what I'm going to say, And she said, "Okay, carry on." And she proceeded to sit down. And I said, "Okay, well, that's cool, like some father-daughter bonding time here, And so I started going. I got into, 2 or 3 slides, and she goes, "Dad, this is boring." I said, "Well, I don't know what to do, and to make it worse, Olivia, I got to wear a mask. They're not going to be able to see me smile or anything." And she's like, "Don't worry, Dad." She said, "We'll hook you up. You just got to do what Mom does." So you see, my wife, she teaches junior high language, and we figured talking to a bunch of farmers and teaching junior high school, it's about the same, right? So anyhow, we just got to get up here and show our slides and display our enthusiasm for what we're going to talk about. So my big plan today was to, I can't even get it adjusted right there, was to just share my enthusiasm through my mask wearing and present my crop insurance business to you like this. This guy's going, "Man, he's a good ventriloquist. I don't know what the deal is with that guy." But now I've been told that, I don't even have to wear a mask, so I'm really excited about that. Thank you very much. Let's get started into crop insurance. What's new in 2022? Hey, for crop insurance, really not that much, actually. And I'm going to bust through these first few slides pretty quickly because I want to get into the meat of the presentation, talking about Farm Bill program decisions and what we're expecting for crop insurance here in 2022. I want to mention this to you, PACE. Maybe some of you have heard about this. It's a post-application coverage endorsement. It's for split applications of nitrogen. And really, I'm not even going to spend any time talking about it because it is an additional item you can purchase on your crop insurance policy to cover that in case you couldn't get your second application on due to wet weather or whatever, if you live in one of these counties, which in this area we do not. So you can't even buy it this year. Stay tuned for 2023. Who knows what they're going to come out, if they'll make any changes there or if the counties will remain the same. Also new in 2022 here, they've changed some language for organic and transitional organic acres. I'm not going to belabor these points. I'm not sure if anybody has any questions about them. You can feel free to ask me. But whole farm revenue policy, that's been around for a while now, developed mostly for specialty crop growers, folks like that, not just your typical corn and soybean guys. What's new in 2022 is this microfarm policy, which is basically a whole farm revenue protection for a very small producer. So someone with $100,000 or less in gross farm revenue, again, specialty crop type grower. I'm thinking, vegetable stand kind of thing. That's brand new for this year. That's it for new stuff. Now we're just going to go into some key reminders for crop insurance. Looking at plant dates here, just want to remind you of these things and also how they're applicable to replant. So the initial early plant date or the initial plant date for corn in our area is April 1st, with the ending date being June 5th. So does that mean that I can't plant corn before April 1st? No. It just means if you do plant corn before April 1st, you're just giving up your right to replant coverage on the federal crop insurance policy. The crop is still insured. If you plant corn after June 5th, again, I don't like that they call it the final plant date, by the way. I think that's a little misleading. It's not really the final plant date. It's the last day for full coverage. That's my definition of it. If you plant corn on June 6th, it's still insured. You've just given up 1% of your revenue guarantee, for every day you go beyond June 5th. It's the same story with soybeans. The dates are obviously different. Soybeans in our neck of the woods is April 15, and first crop beans, the final plant date is June 20th. I think it was 2 years ago now, they changed the double crop date to July 5th, and that was a big win for us down here in southern Illinois, I mean, we're in wheat country right here, and everybody grows wheat. And all of you guys out there remember that the bean plant date used to be June 20th, regardless of whether it's first crop or double crop. So that was a big win for us. Now, additional replant endorsement, this we really want to talk about. And if you have crop insurance, probably many of you already carry these endorsements on your policy. All of the different insurance companies offer something like this. And I've carried it on my farm, I think, ever since it came out with it. But it's a great deal. So you can get coverage for corn or soybeans on this. A couple differences here between the federal crop replant and the crop insurance replant is that this one starts to pay at acre number 1 when you replant. Under the federal crop insurance policy, probably most of you heard about the 20-20 rule. You got to get 20 acres or 20% before you can collect on the replant for that unit, right? So if you only replant, let's say, 3 acres that drowned out somewhere, probably your federal crop insurance policy wouldn't pay, but this one would pay you the value of 3 acres of whatever you're replanting. Also, earlier plant dates. We just said a minute ago that if you plant corn, like let's say on March 30th, that's before the early plant or the initial plant date of April 1, well, you've forfeited your replant benefit on the federal crop insurance, but this will still pay you a replant if you have to replant that March 30 crop. You can also insure 100% interest or by share. So if I'm farming 1/3 and 2/3 with my neighbor, on the federal crop insurance policy when I replant, I'm only going to get paid for 2/3 because that's my share on the policy. But with this one, I can elect to cover all the acres, and I'll get paid to replant all the acres. I do have some guys say, well, I get free replant seed, and so it's not, this isn't really, I don't know if I want to spend the extra couple bucks an acre or whatever to do this. And, I get that. But think about it, and I'm going to run through an example here real quick. There's some guys that I work with where they planted corn, let's say the end of April, and they're having to make a decision last year, or specifically in 2019, to tear that corn up towards the end of May or into early June because it's just a terrible stand, it's drowned it out, and they're looking at having to replant. Collecting the replant money helps make that decision just a little bit easier, So quick example, you got a 100-acre field of soybeans here, 50-50 share. Spring prices, we're estimating at $13. You've taken the replant option. Your federal crop replant, by the way, is the value of 3 bushels of soybeans times the spring price, or 8 bushels of corn times the spring price. That's how they figure that. So it is a little different every year. But obviously it'd be $39, and you'd collect about $1,900 on the federal crop, plus you'd collect an additional $7,000 on this particular replant endorsement at the $70 level. So a good example, this is probably even more important, this slide right here, whether you're buying the replant endorsement or not, because replant is included with everybody's crop insurance policy. The number one rule is make sure when you get into a situation that you call or, text. I like text. It's good because it stays in my phone. And I don't care, by the way, if you're working with me, if it's Saturday night, I was in the field last summer. I remember a guy called me on Saturday night. I'm in the tractor. He's in the tractor, and hey, I got to replant. Don't wait till Monday, because invariably what happens is you forget. You got about 1 million things on your mind, and then you forget. And then pretty soon you're like, oh, I forgot about that replant. And then it puts everybody in a bind. We want to make sure we have all of our I's dotted and our T's crossed. And guys, let me tell you, it's not an Andy Canning thing. It's not an agent thing. It's not even a crop adjuster thing. It's an RMA thing. It's a regulation. It's a rule. And so when we do all this stuff, and we do some stuff behind the scenes in the computer to get you paid, we want to make sure we got all our I's dotted and T's crossed. There's no questions, so we can get you your money. So just pick up the phone and call. And also, here, can I say this one more thing? Don't, after it rains 3 inches and you just planted those beans, think, well, I'll give it a few days and see how it turns out. Guys, we know how it's going to turn out. Probably you're going to wind up replanting. But when you wait, and then you get out there in the field and, I got to replant. And so you get the planter out there and you're going, oh, man, I forgot to call. And then it hits you, right? So just call right when it rains, and then we'll go ahead and get everything going anyway, just in case. We can always withdraw it. No big deal. No cost to you. Prevent plant, this was a big topic of conversation in 2019. We had a lot of wet weather. There's nothing new in 2022, but there was something new in 2021, and I want to talk about that for just a minute. We're learning a little bit about this, or at least I am anyway. What was new in 2021 is called the 1 in 4 rule. Now, 1 in 4 rule for prevent plant coverage says that an acre has to be planted, insured, and harvested in one of the last 4 crop years in order to be eligible to receive prevent plant coverage. Now, some of you are sitting there going, yeah, well, that's not really applicable to me because I don't farm anything that floods. I get all my stuff in every year. It's not a big deal. Well, that could be true, but I want you to just keep it in the back of your mind, because what if you get the opportunity to rent some ground from someone, and it is prone to flooding, and that person didn't carry crop insurance, at least on that piece of dirt. So you're going to rent this 80, and maybe it's a farmer who's retiring, but he never carried crop insurance. So it hasn't been insured the last 4 years. All of a sudden, that acreage on your policy is not eligible for prevent plant coverage. So just mull that around in the back of your mind. Things to consider on your crop insurance policy: you can buy up prevent plant coverage, by the way. I don't know if you know that. Usually it's about the price of a candy bar, not the king-size one, the smaller ones. It's relatively cheap, okay? 5%. Prevent plant coverage pays out at 55% level on corn and 60% level on soybeans. You could buy that up 5%. I'm not really going to take time to go through the choices there, because when you get into a prevent plant situation, here's the number one thing I want you to remember. I want you to call. Call me if you're working with me. Call your other agent, whoever you're working with. Call your agent and talk it out with them. In 2019, I spent a lot of time working with producers, especially in Monroe County. We had a lot of stuff that was flooded out and a lot of prevent plant. You have choices, and there's a lot of options to be made. And if I tell you about them right now, you're not going to remember anyway. So what I want you to remember is I want you to call and talk to me about it at that time. And don't wait until June 5th, the final plant date on corn. When it gets to be Memorial Day, you don't have corn in the ground. Let's start having a conversation so we can be making decisions about what you need to do. So, top 5 rules of engagement here, crop engagement, right? Number 5, we're going to go through a few. These are basically reminders, but this is a big thing right now. Production reporting and record keeping. That's what we're working on right now. You guys have just harvested, and me too, on my farm is a phenomenal crop. Don't you love combining a good crop? I mean, it's just so much fun. All those bushels coming in. We want to report that. We want to report that production, and we want to do it accurately on our crop insurance policy. That's important, okay? So there's 2 different kinds of records you need to keep: hard records and soft records. Oh, and Sherry, I forgot to say your little line. I meant to do that right up there at the top. Sherry, this is Sherry, our training specialist, and she coined this phrase, support what you report, and I really like it. That's what the soft records are all about, okay? Hard records are your settlement sheets. If the adjuster from the insurance company comes out and measures your grain bin, or if they do a field appraisal, like for corn silage or something, those are all hard records. They stand up under an RMA audit. Soft records are like your truckload logs, combine monitor, grain cart tickets, whatever, stuff like that that's going to support the hard records. So let me give you an example. On my small farm down in southern St. Clair County, 40 miles south of here, we've got a couple of grain bins, and actually I'm blessed to live in the very corner of St. Clair County. So even though it's not a big operation, we farm in 3 counties where Washington, Randolph, and St. Clair come together. So I've got crops coming from all 3 counties going into the same bin. So when I haul those truckloads out, I've got the settlement sheets to prove that I had the bushels, but I need to be able to differentiate where all those bushels came from on my different crop insurance policies and assign them to the different units. That's what the soft records are for. Folks, this is just like, I know you guys because you're just like me. When we file our taxes and stuff, and there's a couple lawyers in the room, so I got to be careful here. But, we're going to take every deduction under the law. And, my sister, she's a CPA, and I don't have my taxes done with her for different reasons. But, we're going to deduct everything we can. But if we get audited by the IRS says, well, Andy, you said here you spent X number of dollars on, these tools this year. Where's your receipts for all that? I got to have that, right? This is the same thing. So if you said you had 10,000 bushels of corn, you got to have a settlement sheet or a bin measurement or something saying you got 10,000 bushels of corn. And then if it came from different farms or different counties especially, you got to be able to have the soft records to back that up. Number 4, I guess we're doing a countdown. Acreage reporting and reported acres. This is a big deal. I love it when I'm sitting there reporting production, which I'm doing, now with producers, and I'll sit down with a guy and I'll say, well, hey, on line number 3 here, what did this 37 acres of corn do? And he'll say, well, I just figured that field was 35 acres. And I say, well, you told me last summer it was 37 acres, and that's what's said on your acreage report, and that's what we certified, and then that's also what you have down at the FSA office. So there's a conundrum right there, right? we want to make sure that what we put on that acreage report, the one you fill out in the summer, right, by July 15, that it's accurate. And sometimes there is discrepancies between our acreage report and maybe what you have at FSA, but when you're meeting with me, we want it to be as right as possible. So if we put down 37 acres, and it really is only 35 planted acres, and you report X number of bushels on that farm, and we're dividing by 37, you've done two things. Now you've unintentionally lowered your yield on that farm because there's 2 acres that weren't even planted that we're saying we're dividing by. And then also you've paid crop insurance premium on 2 acres that you didn't even plant. It could be just a measurement thing with FSA, or perhaps, maybe, there's a big waterway in there. And so you need to tell me, and you need to tell FSA, hey, there's 35 acres of corn here, but then see this big grass waterway? Well, that's 2 acres, right? So we want our acreage report to be as accurate as possible. Having said that, we also want to make sure on your crop insurance policy and what you report to FSA and how you are selling the grain, that kind of all lines up. So I want to be marketing grain as Canning Farms Enterprises. So I'm going to sign up at the FSA and report the operator is on the farm, Canning Farms Enterprises. And then I'm going to have my crop insurance policy set up as Canning Farms Enterprises. We want everything to be neat and clean, and there's very, very few exceptions to that. Also, making sure that your shares are the same between FSA and how you're selling grain and your crop insurance policy. Again, just making everything neat and tidy so whenever there's a claim or an audit, it's a piece of cake. Number 3, crop and hail and wind coverage. So this is really becoming a hot topic kind of in the crop insurance industry because of the derecho that happened, and then we've had some wind events just this past year. This is a phenomenon. My dad was telling me the other day, he heard some weather person saying, and I don't want to get into the climate change stuff because I'm whatever, but this, not necessarily global warming, but climate change, it's real. And these storms are going to continue to keep happening. Heavy spring rains and wind and so on. And so as that happens and unfolds, we want you to kind of understand what you're buying in terms of hail and wind, right? So a couple of things. Hail losses and really green snap losses, they're both determined based on the stage of the crop. So you're going to buy so much coverage per acre to secure, to insure that crop. But the theory behind it is, and you all know this, you're farmers, this makes common sense, right? If the damage happens when the crop is small, that crop has a lot of time to rebound and still produce a viable harvest. If the damage happens when the crop is big, then there's not nearly as much time for that crop to save itself or rebound or produce a viable harvest. So they have to stage the crop, and it works a little different at each level depending on the maturity of the crop. Now, I'm not going to tell you that I know exactly how that works because there's loss adjustment manuals that are hundreds of pages thick that when they go out there, that's what they do. But, we just want you to understand that there's procedures and things behind that. Also, a variety of deductibles. Whether you have a 10% deductible or a true 0 deductible, like it starts paying at the first % of damage, right? So just know what you're buying. All of the hail policies from the different companies there, they cover all these other things as well. So there's some added benefit there that you please make sure you're aware of. And like I just said with the prevent, plant, and the replant, what's the first thing you should do if something happens? Oh, man, I failed. What's the first thing? Yeah, call, text. No, call. That's good. Call or text, either one. Okay, so renewal time. We want to make sure we're dotting all of our I's and crossing all of our T's. So whether you're meeting with me or meeting with another crop insurance agent, just make sure that you are checking if there's any changes on your operation. Please be transparent and forthcoming with those because sometimes we don't even know something has happened. And we'll try and ask all the right questions and make sure we got all our bases covered, but just let us know. Keep us in the know so we can be keeping your stuff up to date, okay? This is where I really wanted to get to talk about today is Farm Bill and the ARC and PLC discussion again. You guys are probably sick and tired of hearing about that. You've heard about it since 2014. It was kind of nice, actually, in 2014 when they came out with that. We didn't sign up for the 2014 bill, actually, until 2015. And by then, we already knew what the choices we needed to make, and we signed up. It was for 5 years. So we kind of we got all educated, we made our decision, we signed up in 2015, then we forgot about it for another 3 or 4 years. Well, now we got to think about it a little bit again, but I'm not going to make you think too hard because probably, you guys know, we just had a really good crop and we had a really good yield. So do you think that there's going to be a disaster program payment? No, right? That's the end of the story. So let's talk about how really this year in 2022, what we think is your crop insurance policy should really kind of drive what you're going to do at the FSA office, okay? So let's look at some expectations here, crop insurance. I was really excited last year as a crop insurance agent. You know, like my daughter said, sometimes our jobs are boring, I guess, but I'm a nerd and I get excited about this stuff, and I like looking at charts and data. But this one's very simple. This one here is just showing you, here's what the corn price and the soybean price was last year in 2021. $4.58 on corn and $11.87 on soybeans. Well, this year, we're projecting, probably $5.50 neighborhood on corn and about $13 on beans. That's what things are trading at about right now. Of course, they're up. Derek and I were just talking about that right now. They're up a lot today. If that holds true through February, maybe we'll get a $13.50 price. Who knows? But you guys know those prices are set during the month of February, right? So with that, it means we're going to lock in a lot more revenue on our policies this year, which we're going to need because, Matt, you just heard him talking about the high fertilizer prices, and you didn't need him to tell you. You guys already know that. So it's pretty exciting. But what I want to talk to you about in this slide also is this right here, volatility. See, normally when I go out and I'm meeting with farmers and I say, well, the crop insurance prices are really strong, the markets are higher, and well, yeah, that's going to mean higher premiums. And, yeah, well, that's typically what everybody thinks. Not necessarily the case. We could move the price of crop insurance to $13 or $5.50 corn. We could move that up and down a little bit, and it could almost have a negligible effect on the premium price you're going to pay. But what really drives premium is the volatility factor. That's determined during the last 5 trading days of February, and that number is going to make the crop insurance premium move up or down more significantly than the market price. Now, I'm going to make a confession to you guys. I used to think about volatility as kind of a bad thing because what does it do? Well, it kind of raises the crop insurance premiums, and volatility means uncertainty. It means we don't know what's going to happen in the markets, right? There's all this uncertainty. But I'm going to make an argument now because I'm changing my opinion on this here the last couple of years. Volatility really is kind of a good thing. I keep a little graphic at home in front of my computer. It's a mailer. I think Bungie sent it out. There's no data on it whatsoever. It's just a little bar chart, and it looks like this. Because that's what the market does through the year. Well, I use that to remind myself, and I feel really, I don't want to say dumb, but Matt just seems so much smarter than me. I'm standing up here listening to him, right? And but when the market does this, that's when I want to sell some of my crop. Volatility means that the market is going to continue to do this. That volatility factor is basically the chance between right now and October, when we set the price in October, that the market's going to move up and down. And the more of a chance of that happening, the higher the volatility factor, and that's going to result in a little more premium. But what does that provide us? It provides us more opportunities to sell our crop at higher prices. Now, when's that going to be? I don't know. You got your crystal ball and tell me, but, that's what that's there for. Farm program reminders. So by March 15, the FSA offices I work with, they've already sent me emails. Andy, do you want to do anything? I'm like, I don't know yet. I know I have till March 15th to decide. I want to kind of see where I'm landing on my crop insurance right now. You have the option to make an annual election for ARC or PLC for this year, 2022, and also again in 2023. Now keep in mind, what you're signing up for by March 15 begins on September 1st of 2022, and it rolls around through August 31st of 2023, because that's the marketing year for the crop. So when you go in and sign up for that by March 15, that's the time period that you're signing up for, and you're going to want to be in one of those 2 programs. Again, neither one of them really expected to make any payments, just because we've had 2 things. We've had good yields and good prices. We're going to talk real quick here about the 2 different programs. I want to point out these are FSA programs, Farm Service Agency, right? This is not crop insurance. This is not RMA. This is FSA. Ark County program there on the left protects, that's the one that works like your crop insurance. Okay, so it's based off of a 5-year Olympic average yield and a 5-year Olympic average price. Well, the 5 years that they're using are 2016, 17, 18, 19, and 20, because it has to be the year preceding the previous crop year, right? So, you know what the prices were during that time period. You just heard Matt talking about it. Corn was in the 3s. So they're using a reference price on corn of $3.70, so the guarantee on the ARC program, the revenue guarantee, is going to be pretty low. Now, PLC is a different program. It's a price loss coverage program. That's price only. So the marketing year average price, that means all the grain sold in the open market during the marketing year has to average below these 3 reference prices shown right there in red in order for that program to make a payment. And that's $3.70 corn and $8.40 beans and $5.50 wheat. And I'm pretty sure we're not going to be below that for 21, which is why we're not expecting a payment. And I don't know what your opinion is. My opinion is these prices are probably going to stay relatively strong, at least I think strong enough to keep us out of receiving any PLC payments for 2022. So then you might think, well, then should I sign up for ARC because PLC probably won't make a payment? I don't know that ARC will, but what about in 2022 when we're raising our crop, if we have another 2012, if we have a disaster, maybe not widespread, maybe it's localized to one county, then could ARC make a payment? Yeah, potentially. But I don't think I'm going to sign up on either one of these programs based on that. I'm going to sign up for one of these programs based on what I want to do with my crop insurance. So these are RMA programs, Risk Management Agency. That's the crop insurance. Now these programs, unlike, let me back up here, FSA, free. You sign up for this, it's free, and it's just a disaster commodity program. RMA, you sign up for one of these. There is a cost associated with it. It's an additional thing you buy on your crop insurance policy. And there's SCO. This actually came out in 2014. And then ECO. This came out last year, enhanced coverage option. They're bands of coverage that you can buy and add on top of your regular federal crop insurance policy. So like on my farm, I'm usually at 75 or 80%, one or the other. The SCO would be on top of that, and the ECO is going to be on top of that. And don't worry, junior high students, I have a picture I'm going to show you in just a minute. It's going to spell it all out for you because I know pictures are worth 1,000 words, right? The ECO option, it doesn't matter what program you're in at FSA, ARC, or PLC, either one, totally fine. SCO, you've got to be in PLC. You can't get SCO if you're enrolled in Ark County. You got to be in PLC, okay? Both of these work the same mathematically in that the county has to have a loss in order to trigger an indemnity. But once that happens, then the indemnity is based on your farm's liability. So if 2 guys in the same county take these coverages and the county has a loss, probably we're going to have much different payments because his APH is better than mine, so I'm going to have a lower payment, right? Okay. Just an example real quick. One of the comments I heard about the presentation the other day was, hey, we want some examples. So here's an example. We put in, this is no county in particular, but an example county with a 160 benchmark yield, right? So that's the 5-year average thing for the ARC County, because we're talking about FSA. We're going to compare this FSA, ARC County, to our SCO. And the $370 price, you're talking about $592 benchmark revenue. Well, it's a $509 guarantee because it's an 86% policy. And remember, that's paid on 80% of your base acres. Doesn't matter what you're planting this year, okay? Then with the SCO product, the same scenario. If you've got 160 bushel yield on your farm, your APH yield, and you have an 80% policy with a spring price, corn price of $5.50, obviously that's a lot higher than the $3.70 they're using for Ark County. That calculates all out to about $704 an acre. The SCO is going to add you an additional $53 an acre. In that example, it's a 6% band of coverage. Because SCO takes you from wherever your policy stops, your base policy, your federal crop policy, up to 85%. As shown right here in this nice graphic. I love this picture. This is very good. One of our colleagues up north made this, and it's very nice.
So step one, you need to select what revenue protection level you want to be at. You're at RP policy, are you 85%, 80%, 75%? My guess is in this room we have people at every one of those levels. And then the next step, once you've done that, you got your RP policy set, now we need to decide, do I want to buy the SCO? So you're going to look at what the additional revenue guarantee is going to be on that product versus the few extra dollars you're going to have to pay in premium to get that coverage. And then you're going to stack that on top of those bars. Now notice at 75%, the SCO represents an 11% band. Right here, it's 6%. And then right here would only be 1% because it's going to take you from that 85 to 86%. But in that bar right there is no green. That's because you don't have to put it there. You don't have to buy SCO. In fact, you could leave it off of this one or this one. You could just leave it blank there, and you could buy ECO. And I'll tell you a secret, probably, on my farm, I'm going to spend dollars on ECO first before SCO just because it has a higher trigger. Now, ECO is more expensive than SCO, and that's why. It's got a higher trigger. But that means it's going to pay sooner if we get into a loss situation. So how can we navigate maybe controlling some of that cost a little bit? Here's an idea. On ECO, you could just buy a selection of you don't have to take the full price. You could just take 75 or 50% of the price. So when you stack this ECO up there, if you don't want to swallow the whole bill, but you still want to get up there to that 95% coverage level on the chance that it might pay, you could just elect to take half of the price and stack that coverage on top of your underlying policy. You can buy all three. You don't have to do either one. You can just stick with your regular crop insurance policy. But this is the decision you want to make. If you do decide to put the SCO on, what program do you have to be in? Oh, man, I heard it. Somebody in the back, they're paying attention. Usually the guys in the back don't pay any attention. Good job, whoever's. It was probably Don. It was you. Wasn't it? PLC. No, it wasn't you? Okay. PLC for the SCO. All right? So, gosh, I think that's all I had to say about the farm program. There's one more slide here I want to talk about, and that's with cover crops. And I'll tell you guys, this is just kind of my opinion, as I'm standing back observing what's happening in the crop insurance industry and between RMA, FSA, and the NRCS office. I think they're starting to work together a little bit in this arena to make things a little more conducive for us to have cover crops. Cover crops, I'm not an agronomist, or I don't have any stake in cover crops, but there's a lot of positive benefits there, and I think they're working in the industry to make it a more viable thing. They also want to come together on their definitions and things, so it's less confusing for all of us out there to have crop insurance policies. This graph here is just to show you that we're in zone 4, and the rule for the cover crop is to terminate the cover crop before crop emergence. No effect on your crop insurance policy. Now, when you have prevent plant, it's a good idea to go out there and put some cover crop acres in. Anyway, they're just trying to make that a little easier for us. So, I think that's about all I've got today, but I wanted to say something. Jeff introduced me as working out of the Redbud office, and that's true. But about 3 years ago, I started working out of the Highland office, so I actually covered both territories. But about a year ago, or a little more than a year ago, Adam, now, stand up, Adam, in the back, will you? So Adam and I, we did paper, rock, scissors for who had to talk today, and I lost. Adam won. But Adam Gantner, we brought him on. He worked at the equity and the retail business before this, and it's been really seriously a pleasure for me to get to work with this guy because I was kind of a solo act before that, and it was boring. So Adam and I have a lot of fun together. He's out of the Highland office and does a phenomenal job. He's light years ahead of where I was when I was at his stage in the crop insurance game, and we're a team up there. So Adam's here today, and also Sherry. Will you stand up, Sherry? I want to recognize Sherry just because. This lady, I don't know how many phone calls she gets all the time, and her husband's here with her. Really, I should have him stand up because he's the one that donates her to us all the time. But Sherry Tomhave's our training and product specialist, and she helps us with all this stuff, and really appreciate you. So, I don't know, am I supposed to do this next slide? Is this me?
Yeah, you can do that, or Sherry can do that, or you can both do it together, or...
Okay, so at Farm Credit, we have a great working relationship with these insurance companies. And I think every one of them is represented here today.
Are there things that we could do ahead of time that would expedite our time and making our decisions on crop insurance, our homework before we show up?
So one of the biggest things is kind of knowing where you're at and what your risk is on your farm. I mean, Matt hit on every point really well, I thought. This year is probably not going to be like 21. I mean, our expenses are going to be much higher. You guys all know that. So we want to look at what our crop insurance is going to guarantee us. And if you don't know where you're at in terms of break-even costs, I do some little talks and stuff for Farm Credit with young beginning farm program producers. And I try and talk a lot about having a marketing plan and knowing where you're at in terms of your cost for production. And I think that a lot of us seasoned farmers, and maybe I'm not, I don't know where you're at, but, you need to know where you're at on your operation. And what do you want to get out of the crop insurance? I was just talking with a guy out here in the lobby. He's like, man, my dad really needs to be here listening to this stuff. I've been telling him this stuff. So you got to know where you're at and what your plan is and what you want to do. And when you bring that information to me when we're meeting, it helps me to, guide our conversation a little bit with what we could do in terms of crop insurance to help protect your farm's revenue stream.
Hey, let's give Andy a round of applause. Thanks, sir.
Hey, thanks, guys.